The S&P 500 is sliding toward a critical long-term floor as a new 10-day countdown begins. Donald Trump has pushed the deadline for potential strikes on Iranian energy plants to April 6th. According to Sunny, the White House has extended the no-strike window on Iranian power facilities, giving markets a temporary reprieve until April 6th. However, military reality remains tense. Nana reports that Israeli strikes recently targeted Iranian naval commanders, triggering retaliatory missile attacks on Tel Aviv. Market hopes for a quick weekend ceasefire were further dampened today. Trump signaled on Truth Social that he is in no hurry for peace, warning Iran to take his 15-point plan seriously. This aggressive stance suggests that the geopolitical risk premium isn't fading anytime soon. Instead, investors are now focused on the tactical buildup of U.S. forces during this 10-day window. A structural shift in global trade is emerging from the conflict. Sunny and 42 Macro report that Iran is drafting laws to legalize transit fees in the Strait of Hormuz, with costs potentially reaching $2 million per vessel. This move effectively monetizes one of the world's most vital maritime choke points. Macro Voices argues this conflict marks a permanent transition from a U.S.-led unipolar world to a multipolar order. There are significant concerns about the inflationary impact. Lynn Alden warns that if the strait remains closed indefinitely, oil prices could exceed $200 per barrel. Such a scenario would likely be crippling for the global economy, as energy supply chains face a fundamental regime shift. Technicals are signaling a systematic gamma trap that could accelerate the current sell-off. Macro Voices identifies a major whale option strike at 64.75. This creates a gamma exposure that could force dealers to sell into market weakness, potentially fueling a recursive loop of liquidations. Sunny highlights that the S&P 500 is now testing its 250-day moving average, a level many consider a line in the sand for long-term support. Nana warns that the index has already broken below its 5-day moving average. This breakdown suggests downside momentum toward targets of 6450 or even 6400 if the systematic triggers are hit. Idiosyncratic risks are mounting for major tech platforms. Nana reports that Meta and Google recently lost landmark lawsuits regarding social media addiction. This sets a legal precedent that could open a massive window of long-term liability for all social platforms. Meanwhile, Unrivaled Investing suggests that AI-driven search poses an existential threat to Reddit's most valuable informational traffic. There is a concern that AI models could eventually disintermediate the platform's user queries. We Study Billionaires offers a historical perspective, warning that euphoric valuations allow companies to use their stock as acquisition currency. They suggest this cycle often reverses violently when markets crash, turning a virtuous cycle into a vicious one. In the broader market sweep, semiconductor pricing is on the move. Sunny reports that Intel and AMD plan to raise CPU prices by up to 15% starting this spring. In the auto sector, Sven Carlin warns that Volkswagen faces extreme downside risk in a potential European recession due to its high operating leverage. To protect margins from rising silver costs, Pandora is reportedly shifting its focus toward platinum-plated jewelry. Finally, Brookfield Asset Management is under scrutiny. The channel suggests that its current valuation multiple of 28 could compress to 14 if the private equity cycle pauses or faces higher funding costs. For tactical observations, Macro Voices identifies shorting the euro against the US dollar as the cleanest expression of the current energy-driven trade shock. On the watch list, keep an eye on Reddit. Unrivaled Investing notes a $9 million insider buy by a director, which may signal a valuation floor despite the AI risks. In the precious metal space, gold is testing critical support. Technical signals suggest a washout risk toward $3,300 if the long-term averages fail to hold. These cues are phrased as signals to monitor, not direct instructions. The market now faces a 10-day window to resolve the tension before the April 6th deadline. Watch the 64.75 systematic trigger and the S&P's 250-day support closely as the countdown continues. For a full list of today's sources and claims, check the links in the description. Subscribe for high-signal recaps of the U.S. markets every day.